All right, let's get right into it. Today, we're taking a deep dive into IonQ, the very first pure-play quantum computing company to hit the public markets. Now, for any investor who's looking to get direct exposure to this, let's be honest, revolutionary technology, IonQ is a pretty unique and, yeah, a very speculative name.
But with that opportunity comes a huge question, and it's the one we're going to tackle today. Can IonQ really take its incredible scientific leadership and turn it into the kind of commercial scale and, the financial returns that investors are looking for? Let's dig into the data and find out.
So here's how we'll break it all down. First, we'll talk about the single most important metric for success here. Then, we'll get into IonQ's tech advantage, lay out the bull case, the bear case, and then land on a final verdict for investors.
Okay, first up, before we can even begin to analyze a company like this, we have to understand how you measure performance in the quantum world. And trust me, it's not as simple as just counting up the parts.
The metric that really matters is something called algorithmic qubits, or #AQ for short. You should think of this as the useful power of a quantum computer. See, you can have a ton of raw qubits, but if your system is noisy and full of errors, they're practically worthless. AQ gives you a much better score because it combines the qubit count with gate fidelity, which is basically how reliable each calculation is. And that reliability is absolutely critical if you want to run the complex algorithms that will actually be valuable. IonQ's entire roadmap is built around scaling this one number.
So how does IonQ get to a high AQ score? Well, it all comes down to their core technology, which they believe is their secret sauce, their main competitive advantage. The key to their whole approach is incredibly low error rates. IonQ uses what's called a trapped ion architecture. This lets them get 1 qubit errors down to around 0.02% and 2 qubit errors around 0.4%. Now, those numbers are just way better than a lot of their competitors who use superconducting tech. And lower errors mean you can run deeper, more complicated calculations before the whole thing just falls apart. Right now, that's the entire ballgame.
So this table gives us a really clear picture of where IonQ fits in. You've got IBM over here just chasing massive raw qubit counts. You've got atom computing showing some incredible potential with neutral atoms. But IonQ is all about that fidelity, that quality. Their biggest rival in the trapped ion space is probably Quantinuum, and they're focused on creating what are called logical qubits through error correction. It's really a race between completely different strategies. Do you go for scale, quality, or error correction?
Okay, with that tech foundation laid out, let's build the bull case. Let's look at the key arguments for why IonQ could be a massive winner for investors.
First, the market itself is just exploding. According to Fortune Business Insights, quantum computing is projected to grow from just over $1 billion today to more than $12.5 billion by 2032. We're talking about a compound annual growth rate of almost 35%. IonQ is a pure play bet on grabbing a big piece of that rapidly growing pie. Second, they're already showing some really impressive commercial traction. Look at this. Revenue almost doubled from 2023 to 2024, and the company is guiding for it to nearly double again in 2025. This isn't just a science project anymore. It's translating into real, accelerating sales as customers start buying access and even entire systems. And third, you can see some clear, near-term catalysts right on the horizon. The launch of their AQ64 Tempo system, landing a few more of these massive multi-million-dollar deals, and just keeping up their strong bookings growth. All of those are events that could seriously move the stock higher.
And crucially, the bulls will point straight to this number, $1.6 billion. After a recent financing, IonQ has a massive war chest and zero long-term debt. In an industry like this one, which is defined by just insane R&D spending, this capital isn't just an advantage, it's a lifeline. It gives them years of runway to execute their plan while some competitors might be struggling to find cash.
But of course, no deep dive is complete without looking at the other side of the coin. And the bear case for IonQ is just as compelling. It really centers on immense financial and execution risks.
So, the first thing you have to look at is this staggering cash burn. In a single quarter, Q2 of 2025, the company posted a net loss of over $177 million. And just look where that money is going, over $100 million into R&D alone. Now that $1.6 billion in cash is a lot, but it disappears pretty darn fast at this rate. This is a pre-profit company in every sense of the word.
Next up is the valuation. Trading at roughly 128 times forward sales, IonQ is priced for near-perfect execution. Now, these sky-high multiples are common in this sector. Everyone's betting on the distant future, but it means that any slip-up, any little delay could have a dramatic impact on the stock. There's just zero margin for error priced into this thing.
And that brings us to the core risks. The biggest one is just execution. If they delay that AQ64 roadmap, it's going to be a major blow. Then you've got the risk of a competitor just leapfrogging them, their heavy reliance on a few big government contracts, the near certainty that they'll have to raise more capital down the line and dilute shareholders, and of course the big one, what if true quantum advantage for real-world problems just takes way longer to get here than anyone thinks?
So, we have a well-funded technology leader in a massive growth market on one side, and on the other, a pre-profit company with huge cash burn and immense risk. How do we square this circle? The entire investment case really boils down to this contrast. On one hand, you've got a funded leader with a clear path forward. On the other, you have a speculative venture that's priced for absolute perfection. And you know what? Both of those viewpoints are completely valid, and they're both supported by the data we've just looked at.
This scenario analysis, I think, captures the investment profile perfectly. Our analysis shows a huge range of potential outcomes by 2028. In a bull case, if they hit their milestones, revenue could hit $350 million. But in a bear case, with tech delays, that number could be as low as $100 million. The spread between success and failure here is just enormous, which makes this a classic high-risk, high-reward bet.
So, our verdict is this. IonQ is a long-duration, asymmetric bet. If they successfully scale their technology and quantum advantage becomes a commercial reality, the upside is tremendous. This thing could be a multi-bagger, no question. But the risks of technical failure, competitive pressure, and shareholder dilution are just as real.
So for any investor even thinking about a position, this is your dashboard. These are the 5 KPIs to watch every single quarter. First, bookings growth. Is it picking up speed? Second, gross margins. Are they getting better as they sell more systems? Third, the tech. Are they actually hitting their #AQ milestones? Fourth, the financials. Is that cash burn rate under control? And finally, their customers. Are they bringing in new clients and not just relying on a few big contracts? The answers to these questions will tell you which story, the bull or the bear, is winning out.
And that leaves us with the big final question for the entire industry. IonQ is making a bet that having the best core technology will win in the end. But in a race this expensive and this long, can a focused first mover really beat out the tech giants like IBM and Google, who have practically unlimited resources? The answer to that is going to define not just IonQ's future, but the entire landscape of computing for decades to come.